Inheritance tax and property. In this video I want to look at inheritance tax and property because very often it's property that is driving people into paying inheritance tax. Of course, the person who dies doesn't pay inheritance tax, it's their heirs that pay inheritance tax. So the person who makes the decisions is different to the person who's benefiting from any tax avoidance. So it's a little bit of an interesting one. Anyway, that's what I want to look at in this video. If you want to be kept up to date with tax and accounting issues, please press the subscribe button, and if you press the like button, it helps me in the chat. So when people think about property and inheritance tax, the first thing that they do is they think about the property that they live in. So maybe we can give that away to our heirs, and that can avoid inheritance tax because you've given it away. And that's not often a good asset that you want to give away because it's not income bearing. So you're not affecting your income by giving away an asset, because normally the problem with giving something away is that A, you can't control it in the same way, and B, you're losing the income from it. However, unfortunately, HMRC have thought about this, and generally, if you give away an asset, then it's not effective for if you give away the house that you live in, it's not generally effective for inheritance tax purposes. So then people think, well, very often they've got buy-to-let or investment property portfolios, so can you give those away? Obviously you've got to do something about the income, so you've got a problem with the income because maybe need the income to live on, but notwithstanding that, you might be able to arrange that within the family. If you give the assets away, does that save you the inheritance tax? Well, inheritance tax, once you're over, for a couple with a decent house, can be £1 million. So if you're over that, then the tax rate is 40%. So it's a chunky tax rate, and it really can really badly affect the amount that you give to your heirs. And in my experience, it's a tax that people particularly don't like, and they particularly don't like it because it's money that they've already paid tax on, and it feels like a tax on doing the right thing, for making savings, for looking after yourself, and then you're taxed on it at the end. So it does seem very unfair in people's eyes, in my experience. So if you give a property away, the problem that you come across is, yes, if you give the property away and then you live 7 years, generally it won't be subject to inheritance tax. But the problem you can have is that it is subject to capital gains tax. So if you bought the property 20 or 30 years ago, then there's likely to be a substantial capital gains tax, and that can be taxed at 18 or more likely, probably 28%. That's less than 40%, and it's only on the gain, and you get a capital gains tax allowance, and for a couple you get 2 capital gains tax allowances. So it's not quite as bad as inheritance tax, but it still bites away at it. I mean, you can do this as a program over a number of years so that you get lots of those annual allowances, and that can be looked at. The other problem that it can have is that you can get stamp duty. So the person acquiring it pays stamp duty, which if they've already got a house, is likely to be with the 3% surcharge plus any stamp duty on top of that. So that can be a substantial amount of money. Now then the next thing they say, well maybe we can value it at £1, and we'll transfer it at £1, and then that will get rid of all these taxes because there's no capital gains, and there's no stamp duty. Well, unfortunately, the revenue have thought of that, and if it's between connected parties, which generally it will be in an inheritance tax situation, then it's the deemed value, it's the market value, not whatever value you decide to undervalue it by. So there's quite a bit going on there. So that gives you a taste of some of the problems with property and inheritance tax. I think that if you do have a problem and you want to have a look at it, then I would suggest that you speak to us, your financial advisors, and make sure that you, first of all, give yourself time so that you've got the 7 years to survive. You make sure that you can able to deal with the cash implications of that, and make sure that you've spoken to your wider family, so that you've got a general family agreement, so that everybody knows what's going on, which just makes things a lot neater and tidier. So yeah, please get in touch, and we're very happy to talk this through with you. If you'd like to continue to be updated by me, then please subscribe to the channel, and if you press the like button, it helps me and the channel. Thank you.